computer. Can you just checking? You can see my my screen right now. The PowerPoint's up.
Yes.
Okay, sorry. All right. So without further ado, sorry for the delay. Thanks everybody for joining us today for time-tested wealth preservation in turbulent markets with gold and precious metals with our special guest Chris Blasi. I have a few slides. My name is William Mucker. I'm a client executive with Camaplan. A few slides about Camaplan to get started, and then I'll pass it over to Chris for his presentation. I'll start off with a little disclosure. This was put together by some clever attorneys elsewhere, just to let you guys know that we at Camaplan, we're not attorneys, we're not CPAs, we're not financial advisors, we're not trying to sell you anything. All of this is for educational purposes. If you need those types of advice, go to the necessary professionals, and always do your own due diligence. Good practice wherever you want to invest your money, do your own due diligence. A little bit about myself. My name is William Mucker. I'm a client executive. I've been working with Camaplan since the beginning of 2018. Started off in a rotational role, kind of getting an intimate knowledge of, the different departments, the process, and, helping people out with funding, stuff like that. I'm also a licensed realtor, and I'm going to night classes to pursue a degree in computer science in my MBA. I kind of proved myself with an ability to help out customers and solve problems, which is what led me to be in the role I am now, which is as a client executive. So without further ado, I'll talk a little bit about self-directed IRAs. You'll go to Charles Schwab, Fidelity, TD Ameritrade, and they'll tell you have a self-directed IRA. Yeah, you can direct your funds into anything off of this list. With a true self-directed IRA is for people who want to take their money off of Wall Street and invest into alternative investments, and really have full control over their financial future, especially with their retirement accounts. Some things you can invest in off of Wall Street when you have a true self-directed IRA like Camaplan, who does not have any lists. You bring the investments to us and we'll help facilitate the transaction. Precious metals is a big one. Other ones you can invest in are real estate, notes and mortgages, private placements, and then there's that other. You're not limited to these four categories. I've seen people who have bought sheep and sold the wool in their IRA. I've seen people who bought fruit trees, sold the fruit, a bunch of different crazy things people can do out of these self-directed IRAs. All IRAs can be self-directed. The same investments you can make in your traditional IRA, you can make in your Roth IRA. These are just the accounts, some of the accounts that we offer. All of them have their different benefits and downfalls depending on what your financial goals are. But the important thing is that you can invest in the same things through each of these accounts. And what do we do as Camaplan as a neutral third-party administrator? Why do you need us? So the IRS requires that you use a third party to manage your investments, to keep record of all the transactions in and out, and to report to them at the end of every year. And that's exactly what we do. We're that neutral third party. We don't try to sell you anything. We hold your account. We keep all of your uninvested cash in FDIC insured accounts. And then when you give us the paperwork to invest, we'll send that money or those funds to your investment provider and keep record of that transaction. And you'll be able to see that investment inside of your online portal on your statements, and make sure everything's properly kept and reported to the IRS at the end of every year. Here's my contact information. If you ever have any questions about self-directed IRAs, I'm pretty prompt with my responses, much more prompt than obviously my technical skills today. We're doing a special deal for the rest of the month. If you open up an account before April 1st, just let us know and we'll waive your application fee, which is a savings of $50. And you can open an account online within 15 minutes. If you're opening an account with the intent of investing into precious metals, just make sure that you select the precious metals fee schedule when you're doing your online application. And without further ado, I'll introduce Chris Blasi, our special guest. He is an expert in the field of technology, precious metals, and financial markets. He's been in the industry for over 30 years. He's known as an expert in precious metals. He has contributed to different publications from the likes of the Wall Street Journal, Investors Business Daily, MarketWatch, TheStreet.com, USA Today, and CNBC. He's also the producer and the host of the Great Reset Opportunity Report, which is an online video series. He also owns the patent for the PMC ounce, which is a precious metals composite, and I'm sure Chris will be much better or much more able to explain the intricacies of that himself. So without further ado, Chris, if you'd like to take it away.
Well, thank you. Thanks for joining us today, everyone. I guess, Will, if you can move this, flip the screen back to me so that
I'll do that right now.
All right. All right. So presentation mode, I think. Okay, can everyone, hopefully everyone can see that screen. Will, can you?
I'm not seeing it right now. Let me double check both of my monitors. You should just be able to see, press share screen.
You saw it before, so it's a,
Let's, yeah, it's not up right now. Do you see a share screen button?
yeah, let's, seems, I think, did you kick me out somehow?
No, it still has you listed as a panelist.
Okay.
Sorry, Zoom's not very, doesn't want to participate today, but there we go. I can see your screen now, you're all set.
You can see it now? Okay.
Yes, sir.
Thanks, everyone. So, some of you I may have spoken to in the past, I don't know, but it's going to be a unique presentation in the sense that we've had a message for a number of years at Neptune Global, which is everything is unfolding as we had forecasted and shared with people going back 10 years ago. So I think this is quite an exciting time. We know there's unprecedented things happening in the financial markets right now. So with that, I'll just jump in. We are a precious metals dealer. We're not a financial advisory firm. We're going to share with you information today that's really from our opinion, and you can use it for educational purposes as you evaluate what you want to do personally with your investments. A little bit about us. We've been around since 2002. We're headquartered out of Wilmington, Delaware. So we have an 18-year track record. We have actually been working with Camaplan since 2006. So for when it comes to precious metals IRAs, we've been with them and have a long track record. We are a full-service precious metals dealer. That means we trade and make a market in all the investment-grade physical bars and coins. We do not deal in derivatives, funds, anything that is called paper gold, right? That's and that would include ETFs. So we are the actual physical bullion, which is a different market. For some people, it's a very nuanced different, but it's different than what we know as the futures market or even the world of ETFs. As Will mentioned, we have some unique products, including the patented PMC ounce, which means the precious metals composite. And we'll talk about that in a little bit. As I said, we deal in all the investment grade bars and coins from around the world. And we have these unique accounts called the pure bullion vault accounts or the vault accounts. These are fully allocated inventories of either gold, silver, or the PMC ounce. This is actually one of the most popular investment categories for people with IRAs. And we could talk about that in detail later, but I really want to talk more about what's happening in the markets and why you should be considering precious metals. So first of all, this is something we've put out for years. It's always been true. And unfortunately, in the world of investments, it's all about psychology. It really is. When you watch the TV and you listen to the MSNBCs and the CNBCs, even the Wall Street Journal, there is an agenda toward buying stocks and bonds. It's always buy the dip. And the precious metals have always been the nemesis of Wall Street, and have always been, people have been steered away from it. And for me, I'm a contrarian investor, and I always want to know why someone doesn't want me to purchase something. So a couple of things about precious metals. They have always been a store of wealth, and this is it for 5,000 years. People keep trying to say, no, their time has passed, they're not relevant anymore, but that couldn't be further from the truth if you see what's really going on in the world. All paper money systems have failed, and that will include the US dollar at some point, and maybe not too far in the future. Failing doesn't mean the end of the world. It just means that it has run its course. When you have a debt-based currency like the US dollar, it starts to fail. And actually that's happening right now in the financial markets. Precious metals are tangible and they can be directly owned. Most investments can't. Stocks and bonds are a proxy to own supposedly a piece of a company, but you don't, in all reality, you don't really own that company. And there is a benefit to that direct ownership of an asset like precious metals that is unparalleled with any other investment. And I know most people in self-directed IRAs are real estate, and we will talk about why precious metals are a good counterbalance to real estate, because so many of the characteristics of the two, they are different from each other, actually completely different. It doesn't mean one is better than the other, but it's why one is truly the best hedge against the other. Point number 4, the value proposition for gold, precious metals is not to be confused with other investments. So people make the mistake of not understanding what precious metals purpose is in a portfolio. And they say, well, it's not like my stocks, it's not like my bonds, it's not like my real estate. And that's what it's supposed to be, unlike them. Nothing functions as a hedge or an alternative to other investments if it shares the same characteristics. And the precious metals are uniquely different, which is why they're doing so well now versus every other metal. And quite honestly, you will see that what most people do not realize is they have outperformed the equity markets since the start of the secular bull market in precious metals in 2001. Now let that sink in. You will think with all the talk about the stock market that that has been by far the biggest winner. But the people who just bought gold and silver, really gold, back in 2001 and sat with it have outperformed the stock market in that over that whole period of time. So point number 5 is the role of precious metals are more important now than in the past 100 years. And that is because you are now getting a sea change in the markets, which are really a continuation of what started in 2008, but was postponed until now. And we'll talk a little bit about why the beneficiaries of our current system, meaning those, the Wall Street banks, the equity markets, the bond markets, and even the real estate markets, want you to stick with what they're selling, and they're steering you away from precious metals. And in all honesty, I don't know how close many of our participants follow these markets, but there is very few physical precious metals available in the United States at this moment. And I mean very few. This is the first time it's happened in our 18 years, and it's a direct result of what's happening in the financial markets. So why are precious metals so unique? Okay, first of all, unparalleled liquidity. Okay, there's a ready market globally for the precious metals virtually 24 hours a day. There is no market that is 24 hours a day except precious metals. Not the stock market, not the bond market. And so as a counter to a real estate position, again, because I know so many people are in that, it's not one is better than the other. But if you have a large position in real estate, it makes a lot of sense to have a large position in precious metals also, because one is much more liquid than the other. Precious metals you can sell right this moment on a dime. If you call up, you have the metals, you can sell it. We both know that cannot happen with real estate. So in times, especially like these, where things are moving so rapidly and markets are changing so quickly, the liquidity of precious metals, which is unparalleled, is more important than ever. Second point, no counterparty risk. This is a concept a lot of folks don't fully really grasp. Counterparty risk means when you own the actual physical metal, you own an asset that no one has to perform to make that asset really work or viable. So how does that work to other assets? Well, if you buy real estate for income, you have the counterparty risk that your tenant is going to be able to pay. You also have counterparty risk with the location where that, locale where that real estate is located. I mean, you have tax risk, you have rules and from the local jurisdictions that could be negative towards your investment. Again, it's not one isn't better than the other. It's having something without counterparty risk in your portfolio versus all your other assets which have counterparty risk is logical and intelligent. What's the counterparty risk with stocks? Well, stocks are just an ownership of an operating company. That company's products or services could go out of vogue. It could be run poorly by bad management. There's a whole host of things that will drive that company into the ground, which jeopardizes the risk of your stocks maintaining value. Bonds are loans, right? Like mortgages. How about if the person that the money is lent to doesn't pay? That's the counterparty risk. So as you can see, you can apply that to virtually anything, except when you actually own a hard, tangible asset that no one has to perform for that asset to be what it is. And precious metals have that unique position. Precious metals are also portable, okay? Again, as a nice balance to real estate. Real estate isn't portable. You buy it in one spot, that's, you have to sell it to someone who wants to buy in that same spot. As times change and things evolve, maybe that spot will have risk to it. But metals can be moved around the world. The precious metals are also divisible. Example, you buy $500,000 in real estate, you buy $500,000 in gold or silver. That piece of real estate moves in one big chunk. The precious metals can be pieced off in very small increments. So that divisibility is obviously very beneficial. And precious metals have been globally accepted for 5,000 years, and that has never changed. And there is a flight to precious metals, which is why it's been basically taken away from retail investors over this past week, and that should not be lost. So why is the world grabbing and gobbling up precious metals? And I have now put institutional investors in front of retail investors, which is happening right now. Okay, this chart I'm putting up because I put up charts for many years, and they were accurately forecast where we are. This is a chart that was out 2 years ago, and I resurrected it for this meeting to show the position we've taken and where we are right now. So, precious metals, it's always been our contention that are in a secular bull market. Secular bull markets, and there's also secular bear markets, they run from 20 to 25 years. This market kicked off when gold hit its low in 2001. Secular bull markets have three distinct legs to them. The first one up, the second one where it pulls back, and it does a 50% retracement in the gain from the first leg. And then the third leg is the final leg. That has the biggest returns, and we just started. And I've always made this case that in December of 2015, the very end of the year, was the absolute bottom of the second leg. And that has been proven correct now since 2000, and as I said, 16, so 4 years. But the reason I have that big green circle down in the lower right-hand side is this is the date when this chart was shared with customers. So where are we today? Was our prediction, was our forecast, was our view correct? Well, let's take a look. We'll drop down. Here we are today. Here's the same chart, but now extended to as of yesterday. So again, leg one, that's the same leg you saw before. Leg two, that 50% retracement. Leg three is what we've been in since January of 2016. The reason I have that green arrow going up, that is January of 18, where the previous chart was. Our forecast was we're in the beginning stages of the third leg. And as you can see, that's where we've been ever since. And it's accelerating to the upside, which is the hallmark of a secular bull market, the third leg. The reason I put those head fakes, let me see if I can, all right, those head fakes is because people who unfortunately will lack the conviction would buy into metals, and then there's a pullback, but they don't really look at the trend, and they get scared and bail. And that, unfortunately, a lot of people do that. The head fakes are done by the markets purposely to what they call flush out the weak hands. But if you look at those head fakes, all of them, those big drops, they're always in a rising market. So the drops you see were always higher than the previous low. That's how you know you're in a rising market. So even though the drop came, like in the early part of 2019, those lows of 2019 were higher than the previous lows in this third leg. So this has been our prediction since 2000. We've been forecasting this since 2006-07, that we were in the secular bull market, even before leg 2 kicked in. And it appears that our forecast and observations of the markets have been correct. So what does that mean to you as an investor? What it means is we're still in the third leg, and the third leg has a long ways to go based on how secular bull markets play out. Now, up in the upper right-hand side, I just highlight it again. With all the talk about all the press given about the stock market, all the support, all the cheerleading from the mainstream media, all the denigration of the precious metals, all the talk about precious metals are a barbaric relic. Well, since 2001, if you bought gold, you'd be up 5.9 times. The Dow was only up 2.1 and the S&P 2.5. So if you don't share my conviction that the financial media is just to pump up the stock market and pump up the asset classes they want you to go in and really aren't there to give you sound advice, I would think this kind of proves it. So now here's some of our predictions, and let's see where we are now to see how on target our views have been. Okay, point number 1. Stocks, bonds, and the real estate market will be driven by Fed liquidity and other financial, we'll call them gimmicks, because what's happened since the 2008 financial crisis is the Fed has been basically bailing out the markets with trillions of dollars in money into the banks, right? Buying up all the bad mortgages from 2008-09, pumping up the stock market, and that's a fact. In 2008, the markets were going to crash much further than they did. But what the Fed did is they're able to kick the can down the road by pumping trillions into the markets, buying up bad mortgages. People who are familiar and experts and know the real estate market know that's correct. There are still many units that banks are sitting on that haven't come to market so that they don't crush the market. Point number 2, the Fed were going to create financial bubbles in most markets except precious metals, right? They're always pushing the metals down. They can't continue to do it, just so you know, and the metals will always win, and they're winning right now. But the stock market is tremendously overvalued. I think anyone who's fair would agree with that, especially since so many companies don't even have earnings, like Uber and Lyft and a lot of these other high-flying stocks that people pour their money into, or companies whose revenues have been declining for 10 years, like IBM. And the only reason their stock goes up is they borrow billions of dollars from the banks and realize the banks are just fed by the Fed to buy their own stock back. Now, people may think that's great because the stock market goes up for a while, but that's what I mean by financial gimmick. So I'm going to be brutally, my presentations are just about facts and honest. A lot of people don't like hearing it, but it's true. The stock market has been driven by stock buybacks and other financial gimmicks since 2008, and now it's starting to unravel. Point number 4, eventually, a massive money printing will lead to hyperinflation and destruction of the dollar. It's happening right now. You could say the coronavirus, no one saw it coming. The coronavirus is just the pin that pricked the bubble. And now what do we hear? Massive money printing to bail out industries and people. Not saying whether it's right or wrong, it's just a fact. But once you start printing money with no caps to it, there's nowhere for currency to go but down. Number 5, the paper derivatives, the COMEX and the LBMA futures options markets would collapse. We're going to take a look at what's happening right now. And that is happening right now. So all these predictions, going back to 2008, which we foresaw, are coming true. Point 6, at first, the precious metals market is going to react to what's happening by the purchase premiums for the physical exploding higher. And that's exactly what's happened over the last 2 weeks, and it's accelerated every day since. And number 7, physical bullion will become unavailable to retail buyers. It is now the market is about 90% that window closed. Hopefully it'll open up more and it'll be more readily available, but right now it's extremely tight with very, very limited supplies. And that is not just, and realize Neptune Global is able to buy from every bullion bank, wholesaler in the world. So we have access to every market maker, and the metals just aren't there. And point 8, physical in any quantity will become available to retail buyers, and that's a maybe, at much higher prices, which is happening right now. So the premiums are going up, the supply is extremely limited. If for it to open up in greater quantities of availability, the prices will be much higher. So where are we now on some of those forecasts? Well, this is one thing to always keep in mind. You have to look at what people do, not what they say. Now, this has been going on since 2005, but central banks have been buying gold for over 10 years. And we've shared and broadcast this to potential customers for years. And unfortunately, a lot of people just were caught up in the moment and what was said about the stock market and the bond market. The central banks aren't fools. They may not be the best people in the world and they may not be working on your behalf, but they're not fools. They've been buying it for years, knowing full well what was coming. They understand that the debt loads across the world are unsustainable. And their buying spree has been accelerating in the last few years. Now, we've been talking about it for 10 years. Of course, Bloomberg only shared this a year ago, but they did share it. And that should have been, once it becomes common knowledge, that was your tell that things are getting really close to where we are now. Now, some of the other things I talked about the futures markets imploding. If you look at the top headline, these are current headlines from the last few days. The LBMA, which is basically the futures market for the UK, or London, which is the biggest gold market in the world, followed by New York, the COMEX. The COMEX is now basically imploding. They're trying to bring in gold from other sources to settle their futures contracts. So basically, they're fending off default. What that means is future contract holders are demanding physical delivery on their futures contract, on their option, and the metal isn't there. This is something for anyone who's known me and has maybe joined one of these webinars in the past. We said this day would come 5, 6, 7, 8, 10 years ago, and now it's playing out. They were able to forestall it for a while because people were willing to basically, like the emperor's new clothes, believe the emperor was okay, but now it's coming apart. And this is one of the reasons physical metals have been taken away from retail investors. It is being now diverted to institutions like COMEX to try to bail them out. It's not right, it's not fair, but this is what happens, and we knew this would happen, and it's playing out. The helicopter money, this is what you talk about. That's point 2. This is the unlimited money printing that will eventually hyperinflate and damage and really kill the dollar as far as its purchasing power and truly accelerate precious metals to the upside. Again, these are headlines, and I think all of us know, as we're all confined to our homes because of coronavirus, watching TV, what they mean by helicopter money is exactly what they're talking about. Trillions to bail out everything from cruise ships, and should they really be bailed out, to checks in people's pockets. Again, I'm not making a moral judgment on it. It's just a fact. But when you had the system we had that's so dependent on this, and now we have a crisis that is knocking this house of cards down, the quote, quote, helicopter money was the direction we knew they'd always go. And it only has one outcome. For anyone who thinks the outcome won't be, what we forecast, not likely. Because once you open this, once you let this genie out, you can't put it back in. And the bottom part is the QE, the quantitative easing, which is the term they use for basically the ongoing money printing, isn't really working. If you followed what happened in the stock market, the Fed has been talking about bailing out markets for several weeks now. Yes, the market has up days, but net, it's down, and it's down a lot. So trillions have been pledged to bail out companies, the markets, the bond market. The Fed said they're buying all sorts of bad debt, off of banks, off of hedge funds. They're bailing out hedge funds, which is really, in my opinion, morally wrong, but it is what it is. We knew this would come, and that's what's happening. And this is why the precious metals are doing so exceptionally well right now, and will continue to do so. So that it's a brief, quick summary, but it's just what's happening. It really doesn't. There really isn't much more to say about the precious metals. They are the physical asset that is the hedge against all paper-based assets. And unfortunately, since the real estate market is so dependent on mortgages and finding a buyer who can secure a mortgage, it has the same risk. So my point is, the metals are a position that if you haven't established a position in, you should try to establish a position in. Well, there's a little bit of window open. And if you have one, you might want to consider adding to it. And as I said, since 2001, you can see, despite what the common perceptions of the precious metals market is, it's actually been the great outperformer. So again, people who just bought, hold, and tuned out all the noise have done exceptionally well. And and with no work. I mean, the metals just sit there. You don't have to do anything except hold it. So, you know, what could have been what's a better investment for an individual? So we did talk a little bit about the PMC ounce, right? Along with gold and silver, the Neptune Global has created a product called the PMC ounce, and that has been in the market since 2008. And what it is, it's a diversified position in the precious metals. For each PMC ounce you buy, you're getting a fixed fractional amount of gold, silver, platinum, palladium. That's all backed 100% by what they call physical bullion and the highest quality bars in the world. They're called LBMA approved bars. That's all in a fully allocated inventory at a non-bank depository. We have this for our regular customers, and we have this very special offering for the PMC ounce in IRAs via our relationship with Camaplan. So Camaplan, as a custodian, has their own inventory of the PMC ounce, and as their IRA holders take a position in the PMC ounce, just as they can with the gold vault account or the silver vault account, or even securing bars and coins for us, that is then assigned to the Cama client. So the beauty of the PMC ounce is it gives a blended return. The purpose of it is to give her a better risk-adjusted return. It's not about beating for silver. It's about having a smoother ride with lower volatility. It's not actively managed. It's a fixed position in the physical metals. There's no management fees because it's not a managed fund. It's 100% bullion back. It trades in real time, meaning you buy and sell in real time. And it has proven itself to do exactly what it's designed to do since 2008. If anyone's familiar with Jim Rickards, and there's other well-known commentators and advisors like Robert Kiyosaki. For anyone in real estate, I think you know who Robert Kiyosaki is. Just so you know, Robert Kiyosaki's been a client of Neptune Global and an owner of the PMC ounce for 4 years now. He's also, I can say this because he's recommended it on his show. He has a Rich Dad radio show. And since he said it on the show that he owns it, he's a client, I'm free to say that. I'm not divulging anything that's not public. Jim Rickards is the same way. They understand the value of the PMC ounce, what it delivers to the investor, the benefit of having a diversified position, and obviously the benefit of it being fully allocated physical bullion. So we've had and realized Robert Kiyosaki, Jim Rickards, and folks like that who've seen the value of Neptune for clients as a company and our particular products like the PMC ounce receive nothing from us, no compensation. These are true, pure recommendations with no benefit to the individual. And here's the rate of return. This is just showing, and you can go to our website at any time and see, this is updated every day, and this goes back to 2008. The red line is the PMC ounce. The gold line is gold, and the silver line is for silver, and the blue line is for platinum. The only precious metal not showing on this chart is palladium. Palladium has gone up so much in the last 5 years that it skews the charts, but it is part of the PMC ounce. So you can see the PMC ounce has not only had a smoother, less volatile ride, but it's outperformed those other metals. Gold has been finally contributing more to the PMC ounce. Today, just so you know, gold is actually down about 1.5%. The PMC ounce is actually up 6% today. And that's because palladium is up $428 an ounce, platinum is up $41, and silver is up 53 cents, which when you're only $14 spot, that is that's almost a 4 to 5% return. So when this chart updates tomorrow, you'll see the PMC ounce will be up to about 127% year to date, and gold will be back to 93. But this is the benefit of having the blended return, capturing the upside of each metal. And look at silver. Silver is part of the PMC ounce. But again, this is why a blended return is better than than maybe just being in one or two metals. Silver is very volatile. If you look back in 2010, 11, and 12, silver was way up, way above the PMC ounce, and then it's come crashing down. And if you look at it now, it's only up 38% since then. So silver is a huge part of the PMC ounce physically. When silver finally starts to return, give better returns, it will contribute more. But the PMC ounce, instead of trying to figure out what metal's best to go in, the purpose of it is to diversify position across the precious metals. And that is why Jim Rickards, Robert Kiyosaki, and other very in-the-know analysts, commentators understand the value of the product. So just so you know, as I said, our products are all available to CamaPlan clients, whether it's the PMC ounce, the gold vault account, silver vault account, or regular bars and coins. But I do have to preface, supply is extremely limited, and that's not to be, to just try to get you excited. It's a fact. Like right now, today, we are not able to take any PMC ounce orders. There isn't enough of metals in the market. So of course, the holders of the PMC ounce, if you own it, are doing well. Now we do get supply, but it's coming in very slowly, and hopefully in about a month or so, the things will open up much more. But a lot of the refineries right now are closed down. They've all been hit by the coronavirus. That includes all the refineries in Europe, in Switzerland and Germany, and the major ones in the U.S. and North America. So between trade restrictions, the coronavirus, COMEX having trouble fulfilling orders where people are converting their options and futures to delivery, it's the perfect storm in the metals. But we are still able to function and provide some metals to individuals. So I would suggest, if you're interested in the metals and using your IRA, that you at least position yourself and to be a holder. That means opening your precious metals IRA with CamaPlan. And we are working with individuals who are looking to secure the metals. And as they become available to us, we are making it available to the clients. And that includes our friends at CamaPlan. So I hope we have a chat box or something, or maybe we can open the lines. Will, I don't know how we are going to, maybe questions. But if you have some questions, I'd love to go over them with you.
Yeah, so I announced in the chat that we will be taking questions through the Q&A function through the Zoom webinar.
Okay.
So far, nobody has answered any or asked any questions except for one in the chat was more of a CamaPlan question. They're asking if the precious metals account is different from the normal CamaPlan account, and it is, just because it's a different fee schedule rather than paying for record keeping with investments like real estate, private lending, and private placements. You're more so paying for storage and maintenance of the metals, so it is a separate account. but it is available to all different types of IRAs, just like anything else. We have a question that came in from Daryl. He said, what is the current PMC share price? If you can answer that.
Okay, and just so you know, because it's important, the PMC ounce is not a share. A share, and I know it may sound like nitpicking, but it's actually very important. So a share means a fund, right? This is actually, you're being assigned and you own the actual metal directly. So the purchase price for the PMC ounce, and I would encourage you to learn more about the company by going to neptuneglobal.com, and everything is there. You'll also, if you click on the Bullion Exchange tab there, it'll take you to all the products. The current price of the PMC ounce is $132.40 per ounce. Now, it's a little bit of a, the only issue with that is we're not able to buy any more metal. So it's really a posted price, but the trade cannot be executed until further notice. So, and all technically, that's not price discovery, but that's the nature of what's happening in these markets. But short answer, $132. Again, neptuneglobal.com. You can learn a lot about the site, and you can see all current pricing there.
Thanks, Chris. And I'll add on to that. If anybody needs help setting up a precious metals account via, the online application or the other method, feel free to reach out to Camaplan as well. Myself or another one of the representatives will be happy to help. We have another question coming in. Can I fund my self-directed IRA while waiting for the PMC ounce to become available and buy ASAP? I could answer that. According to, or depending on the availability of the PMC ounce, as Neptune will be able to, walk you through that. You can set up your account, you can fund it, your uninvested cash will be FDIC insured until you're ready to buy, and then ourselves at Camaplan or somebody from Neptune Global representative will help you get the purchase ready for when the PMC ounce is available. And again, to set up the accounts, my contact information, wmucker@camaplan.com. I'll help you get set up and ready to go. But you can definitely open it up and fund it whenever you'd like. Are there fees when holding? Another question, are there fees when holding, buying, and selling metals? From Camaplan, there aren't any fees except to send the funds over to Neptune when you go to buy it. And then when you go to sell it. Holding, there's an annual record keeping fee. On average, it's about, I believe it's around $280 per year, but it fluctuates on the value of the metals. Chris, this is a question. Go ahead.
Yeah, this is a question for me. So one other thing, with Camel, we also have the gold vault account and the silver vault account. We're actually able to do some of the gold and silver vault account. The premiums reflect what's happening in the marketplace right now, but there is a limited amount of gold that we are bringing into the depository to fulfill customer orders. So the short answer is yes, there's some gold and there is some silver. Problem with the PMC ounce is there's been no platinum and palladium for about a week and a half now, anywhere in the United States available. As we get it, as our wholesalers know, we're in the queue for when they buy some back from a customer somewhere. That's how we say that it'll come in, and as it becomes available, we contact people who are, in the market for it. But yes, there is some gold today. So with your CAMA self-directed IRA, you can buy the gold vault account, and that will be a way to have a position in the precious metals.
Awesome. We have another one coming in. Does my account with Neptune Global have to be in my name only to avoid taxes for IRA transfer from my 401k? So the account with Neptune Global will be in the name of the IRA, which is going to be Camaplan FBO, which stands for benefit of your name IRA. If you open up an IRA with us, it's the same IRA as anywhere else, as long as it's in the same tax status as the funds you're bringing over from your 401k. It'll be a rollover, which is not a taxable event, but it is reportable. So you're just going to be rolling over from retirement plan to retirement plan. It's not taxable unless you're moving from pre-tax to post-tax, and most likely you wouldn't be doing that unless your financial advisor tells you to do that. But it is not a taxable event. Again, it's only reportable.
And I'd just like to add one thing, Bill. One misnomer, when it's an IRA, the account actually isn't open with Neptune Global because we can't be, that we're not IRA administrators, custodians. So, you know, when people do directly with us, that account is open with Neptune Global. With an IRA, the account is open with Camaplan, and we function as the dealer, but the account is actually open with Camaplan.
Thanks for that clarification. Sorry, I didn't phrase myself correctly.
I think the next one's for you.
Perfect. Can I fund it through my Camaplan LLC, or do I send funds back to Camaplan and open directly through Camaplan? Now, if you have a checkbook LLC established, what you invest in through that checkbook LLC, only you can control that. You have checkbook control. You just need to make sure you're following IRS rules, and precious metals is obviously an allowable investment. So you can contact Neptune and purchase it through the name of the LLC. I'm sure they have a different method for that. You'll probably be dealing directly with them. Now, with us, we do have a separate account for precious metals. Again, you're not paying for record keeping. You're more so paying for the storage and maintenance. It probably will, I'm not sure if I could say it would be easier to do it directly through the account if you already have the checkbook LLC, but it's definitely achievable either method. Anybody else have any more questions?
All right, I think one more came in.
Oh.
Okay, yeah, to clarify, there's currently gold and silver. Yes, the answer is yes, there is. I mean, the quantities are limited for, you know, so, and it's a minute by minute thing. So right now, yes. Depends on the size of the trade, right? Anyone coming in with $500,000 would have a real problem. But there is some, but it's, again, it's changing minute by minute. Our traders are on the phone with our sources all day long, sourcing what we can, so.
Perfect. If anybody has any other questions, please send them. Chris, I'm not sure if you provided these yet, but could you provide your contact information for the people watching in case they have any questions for you?
Sure. So let me, here we go, oops. Okay, that's our main number. That's the office. Our website is www.neptuneglobal.com. You can also go to the website and click on the contact. And if you have any questions, you can submit it that way, or you can call the 302-256-5080 and just speak with one of the traders. Just when reception picks up, just tell them you have a question, you'd like to speak with a trader. And again, our website is also very helpful. A lot of information about the company and the products. And again, if you're opening an IRA, the first step would be to open your account with your precious metals IRA with Camaplan. And once you open the account with them, then you would fill out what they call an asset purchase directive, when there's new to a self-directed IRA, and that comes over to us, and then we execute the trade on your behalf. So that's the process. That's the steps. One last, if there's any more questions. If not, I guess, I mean, our people are always around and happy to answer anything. Wait, all right.
It looks like we have two more questions, Chris.
So would you allow the market to cool off a bit before additional purchases? You know, so we are look, we've been doing this 18 years and we've been talking to our wholesalers. This has never happened before, which is what's happening right now. I would never want to tell a person that, hey, just sit back, don't worry, it's all going, it's going to be a lot available to you shortly. There's, as I said, the past is the past. The time, we've been telling people for years, it's that they should buy. Unfortunately, a lot of people waited. We're trying to, I guess, market time or something. It isn't so crazy. It's not like, anyone's overpaying for where the metals are projected to go. So to say I believe the market is like the prices are all going to come down, that's not necessarily true. And the other problem is this. Here's the real thing. If you look at the precious metals market, a week and a half ago, the precious metals all came down a lot in price. when you look at spot price, those are futures contracts. That's not the physical market. Simultaneously, as the futures price were going down, so if you turn on your TV or you listen to Bloomberg and they said, oh, gold went down $50 last week. Well, the physical market, everyone's buying the physical, and the premiums were going up on the physical. That's how the physical market disconnects from the paper market. So that's part of the head fake. Okay, 2 weeks ago, people thought, oh, the metals are all going down. There's a couple of people that sold their positions that, with us, and, are actually regretting it tremendously right now, because the physical metals were not going down. They were actually going up in price, and they actually disappeared. So market cooling, say, what's your measurement? If you're going to look at the futures contracts, prices may come down, but that doesn't mean that physical will be available. People think that when the spot price goes down, people must be selling a lot of precious metals. No, they're selling a lot of futures contracts they're trying to get out of. But no one backed up the truck and delivered bars of gold and silver to the depositories to become available. So I know it's a tough thing to get used to when you're not in these markets, and you're, to understand that there's a huge difference between owning the physical asset and trading a derivative, which is when you look at price quotes on TV or even on our site. The spot prices are just what the derivative market is, but there's nothing there to back them up. They're contracts. So, think of it as remember back in 2000, you had those CDOs, those derivative products based on interest rates and all that. That is not like owning a piece of property, right? That's the way the spot price is this physical metal. So a CDO in 2008, collateralized debt obligation, is completely different than actually owning a piece of real estate outright, right? But if you would say those are two separate markets. That's what the physical gold market is to the spot price, right? Two different markets, but it's been allowed to be conflated, and people believe that they are the same, but they're not. So I don't know about cooling off. Again, maybe the futures market prices drop a little, but there's really going to be no cooling off in the physical for a long period of time, because the refiners are closed probably for about at least 6 to 8 weeks, and the amount of backed up orders are tremendous right now. So I don't know. It's probably not the answer you want, because it wasn't just a yes no, but again, it's a very fluid market, and there are issues impacting the physical metal market, multiple issues that are all pushing the price higher. And again, the physical gold, and we've told this to customers for years, where do you think gold is going? And customers would say to us, well, I think gold is going to 2,000 an ounce, or 2,500 or 5,000. And our answer to them was, then what are you waiting for, right? People would say, well, I'm going to wait for the market to pull back. If gold is $1,600 an ounce and you think it's going to 3,000, what are you trying to time, right? And unfortunately, then the window closes. So, that's something to consider when you're making your decision. All right, thanks, Chris.
Yes, and there was actually some.
How about copper and platinum? What is the outlook for these? Okay, so those are two totally different markets. Copper is a base metal, and platinum is a precious metal. So we don't deal in platinum. Copper is really driven. Copper is not uncommon, right? So it's truly driven by, use when the economy is strong. That's why copper's been going down in price. Platinum is a totally different animal. It competes with palladium because they're used for the same industrial purposes. And also they're very rare, as opposed to platinum and palladium basically only come out of two countries, and that's Russia and South Africa, which, because, again, with such limited availability coming out of such, we'll call it unstable or hostile countries, that, makes it even more valuable. So the outlook for platinum, and I can't speak to copper, again, I would say if the global economy is going to slow down, they're going into recession because of, what's happening, that would be a negative to copper. Platinum, not as much, because platinum has a rarity aspect to it that copper doesn't have. Okay, so it says they are the prices that scroll across the top of the GBX website. So the GBX website says spot prices. Again, that's what everything is calibrated off of. So those are the same spot prices that you'll see on Bloomberg or any TV. When you buy physical metals, they use the spot price as the basis to start calibrating. Now, what happens is when the physical market starts decoupling from the paper market, the amount you pay over spot for an actual physical product goes up. That's how it deals with, they're still using spot as the base, and since physical is in short supply and owning physical is becoming more and more desired, then the purchase premium goes up. So we all have to work off the same spot. So to give an example, certain things just aren't available at all, like gold maple leafs or eagles, right? They don't exist anymore in availability. But so you take something like a gold 1 ounce bar or a gold 10 ounce bar. 5 weeks ago, a 1 ounce bar was probably spot plus 3%. A 1 ounce bar right now is spot plus 10%. So they still have to use that same spot price, but since spot price does not mean owning physical, the premiums on the physical are way up. And that's if you can get them. Most products are not available at all. So it was a long answer to your question, but I always think it was what was needed to clarify. Ray, did I give financial? Could you comment? Okay, that's a great question. So the amount of gold versus silver to own. So that's the age-old question, right? What should I own, gold or silver, or a combination of the two? Silver is the much more volatile metal. Silver has a tremendous upside potential because it's been the biggest laggard. But if a person was to portfolio evenly just between gold and silver, if the PMC ounce wasn't available, I personally, again, this is a personal opinion, gold is still the primary go-to metal. I would always do like a 60-40 in favor of gold. I mean, 50-50 is fine too, but I would favor gold over silver. At least half and half, but I wouldn't go more silver than gold. And that's just my personal opinion.
Awesome. Thanks, Chris. There is a question that somebody's been using the actually webinar chat to ask. They asked a few times, can you take physical delivery at any time, at any given time? Does that make sense? Take physical deliveries?
Yeah, so IRAs, of course, if you take, so a couple things. There is a conversion option for the PM, like the gold volt accounts or silver volt accounts. You can choose different products to go into. Now, the bars that are in there are certain size bars, unless if your account, like say gold, there's a lot of kilo bars in the for the gold portion, right? So if you own enough PMC ounce or gold volt account to convert to a kilo, you can take a kilo. In normal times, you can also say I'd like to go to a 1 ounce bar or a gold maple leaf or or a gold eagle. But if they're not available, that conversion option isn't there. So the metal's always there. If you have enough to convert to something for delivery, yes, you can. If you want to convert it to a different size bar or coin, that's doable when the market has them available. Now, when it comes to IRAs, that of course, then you run into the whole issue of you still have to consider that's a distribution. So, and that would be like taking a distribution from anything in an IRA. But yes, we do metal for delivery, and the Volt accounts are convertible to delivery. We have a tab on our website under supporting services. It says Volt account conversions. That gives you a little more detail around that.
Perfect. Thank you, Chris. It looks like
there's another question. There's another question. Where can I follow the PMC index value daily? Outside our website, neptuneglobal.com. The PMC ounce spot price, which is just calculating it from the regular spot prices, plus the buy price under bullion exchange, plus the chart we talked about is all, and that chart is on the home page. So Larry, go to neptuneglobal.com and it's all there. And the reason there's not a ticker, tickers are for exchange-traded products like ETFs. Again, we are not an exchange-traded product. You're owning the actual physical metal. So there is no paper instrument being put between you and the underlying asset. That's direct, you have direct ownership. All right, so, yes, Will.
I was just going to see if there were any other questions. I just want to make a comment that if anybody is interested in opening up a precious metals IRA with Camaplan, you can do it through camaplan.com, or you can contact me directly through wmucker@camaplan.com. That's W, M as in Michael, UCKER @camaplan.com.
All right, well, everyone, thanks a lot. It was a real pleasure being able to talk to you, and all the best to you in these wild and crazy times. And Will, thank you so much for hosting this. And again, you can just contact Neptune Global by phone or go to our website and hit the contact tab if you want to send a question to us via email. Thank you very much.
Everyone. Thanks, Chris. Thanks, everybody. Everybody have a nice day. Recording of this webinar will be available. You can either email me or it should be available on the Camaplan website as well. Thank you again.